Welcome back to the Community Corner podcast, where we explore the companies in the S500 through the lens of behavioral finance. I'm Arnav.
And I'm Nikhil. Today, we're focusing on Colgate-Palmolive Company, a global leader in consumer products, particularly in oral care, personal care, and home care. Colgate-Palmolive has built a strong brand presence with its iconic products like Colgate toothpaste and Palmolive soap. We'll be discussing how behavioral finance impacts their decision-making, diversity and inclusion efforts, adaptation to different markets, and how they compare to other companies in the industry. Let's get started.
Colgate-Palmolive has been a dominant force in the consumer products industry for years. From a behavioral finance perspective, how do biases like brand loyalty and the anchoring effect influence their decision-making, especially in areas like product development and marketing?
Brand loyalty is particularly relevant to Colgate-Palmolive's approach, especially in how they manage their product portfolio and customer engagement strategies. In the consumer products industry, customers often stick with familiar brands due to trust and the perceived reliability of well-known products. Colgate-Palmolive leverages this bias by maintaining a strong focus on their flagship brands like Colgate and Palmolive, ensuring consistency and quality in brand messaging. This approach helps Colgate-Palmolive maintain a loyal customer base and reinforces the dominance of their key product in the market. The anchoring effect also plays a significant role, particularly in how Colgate-Palmolive approaches pricing and promotions. The anchoring effect refers to the tendency for people to rely heavily on the first piece of information they receive when making decisions. Colgate-Palmolive uses this bias by setting initial prices or offering promotions that anchor customers' perceptions of value. For example, by introducing new products with a premium price point, Colgate-Palmolive can establish an anchor that influences how customers perceive the value of their other products.
And this focus on leveraging brand loyalty and the anchoring effect has helped Colgate-Palmolive maintain its leadership position in the consumer products industry, appealing to both customers and investors who value consistency and a strong brand experience.
Exactly. Colgate-Palmolive's strategic use of brand loyalty in maintaining their core products and the anchoring effect in pricing and promotions appeals to investors looking for a company that balances traditional strengths with strategic marketing. However, this approach also means that Colgate-Palmolive must carefully manage the risks associated with changing consumer preferences, competitive pressures, and the growing demand for sustainable products, particularly as the consumer products landscape continues to evolve with new trends and demands.
Let's talk about diversity, equity, and inclusion at Colgate-Palmolive. As a major player in the consumer products industry, DEI is particularly important for Colgate-Palmolive. How does this intersect with behavioral finance?
Colgate-Palmolive's approach to DEI is crucial, especially as the company operates in a global and highly competitive industry where inclusivity can drive better decision-making, customer satisfaction, and employee engagement. From a behavioral finance perspective, strong DEI initiatives can enhance Colgate-Palmolive's ability to innovate and appeal to a broad customer base by fostering a culture that values diversity and inclusion. A commitment to DEI allows Colgate-Palmolive to attract and retain top talent from various backgrounds, which is essential for maintaining its competitive edge in the consumer products industry. For investors, Colgate-Palmolive's focus on DEI can signal that the company is socially responsible and aligned with modern societal values, which can enhance its reputation and appeal to ESG-focused investors. Additionally, DEI efforts can help Colgate-Palmolive build stronger relationships with customers, employees, and communities, reinforcing its brand as one that values inclusivity and ethical leadership.
Investors are increasingly considering DEI when evaluating companies, especially in industries like consumer products, where the ability to foster inclusivity and cater to diverse customer needs is critical to long-term success.
That's right. By embedding DEI into their corporate culture and product development strategies, Colgate-Palmolive not only improves its ability to serve a broad range of stakeholders but also strengthens its market position and attractiveness to socially conscious investors.
Moving on to market adaptation, Colgate-Palmolive operates in a highly competitive and fast-evolving industry. How does the company adapt to changing consumer preferences and market conditions, and what role does behavioral finance play in this?
Colgate-Palmolive's strategy involves continuously adapting its product offerings, marketing strategies, and operational practices to meet the evolving preferences of consumers while maintaining its focus on quality and customer satisfaction. From a behavioral finance perspective, this adaptability is crucial for managing the risks associated with changing consumer behaviors, competitive pressures, and market trends. Colgate-Palmolive's ability to understand and respond to new consumer trends such as the demand for natural and sustainable products allows it to stay relevant and competitive. By using data analytics and customer feedback, Colgate-Palmolive can identify emerging trends and adjust its strategies accordingly, helping to mitigate risks and capitalize on new opportunities in the consumer products market.
And this adaptability is essential for Colgate-Palmolive, especially as they face competition from other consumer goods companies and the growing demand for healthier and more sustainable products. Their ability to maintain their brand's relevance and leadership in a changing industry is key to their continued success.
Exactly. Colgate-Palmolive's focus on understanding consumer behavior and adapting its strategies accordingly allows them to remain a dominant player in the consumer products industry while staying ahead of emerging trends and challenges. However, this also requires them to be proactive in responding to changes in consumer preferences, technological advancements, and competitive pressures.
Now, let's compare Colgate-Palmolive to other companies in the consumer products and personal care sectors like Procter & Gamble, Unilever, and Johnson & Johnson. How do the behavioral finance dynamics differ?
Colgate-Palmolive's dynamics are often compared to other consumer products giants like Procter & Gamble, Unilever, and Johnson & Johnson, particularly in their approach to product development, marketing, and competition. Colgate-Palmolive's strength lies in its focus on oral care and personal care products, appealing to investors looking for a company that balances brand loyalty with strategic innovation. Procter & Gamble, with its broad portfolio of consumer goods and strong emphasis on brand management, appeals to investors interested in a company that prioritizes market dominance and consumer engagement. Unilever, known for its leadership in sustainability and global reach, attracts those looking for a company that is driving advancements in sustainable consumer products. Johnson & Johnson, with its focus on health and wellness, appeals to investors interested in companies that integrate consumer products with healthcare expertise. Colgate-Palmolive's behavioral finance dynamics are shaped by its reputation for quality, strong brand presence, and adaptability, making it an attractive option for those seeking stability and growth in the consumer products industry.
And unlike Unilever, which focuses heavily on sustainability and global reach, Colgate-Palmolive's strength lies in its specialization in oral care and personal care products, appealing to a different type of investor and market.
Absolutely. Each of these companies has its own behavioral finance dynamics that influence how investors perceive their value and potential risks. For Colgate-Palmolive, the focus on quality, brand loyalty, and market adaptability provides a unique value proposition in the consumer products industry.
To sum up, Colgate-Palmolive's approach to business is deeply influenced by behavioral finance principles, whether it's through their product development strategies, adaptation to changing consumer preferences, or their approach to DEI. But like all companies, they are still subject to the biases and perceptions that can influence investor behavior.
That's right. Understanding these dynamics provides a clearer picture of what drives Colgate-Palmolive's stock price and where the potential risks and rewards lie.
Thanks for joining us on this episode of the Community Corner podcast. Until next time, I'm Arnav.
And I'm Nikhil. Stay curious and keep questioning the narratives.
Thank you.